to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. Today I would like to welcome another startup of the month in our media partnership with Frankfurt Forward. This time startup of the month is Ginmon, the Frankfurt-based robo-advisor, and I do have its founder and CEO here, Lars. Hey, welcome and congratulations.
Yeah, welcome everyone.
Very glad to have you here. Actually, we've been chatting a little bit before the call because we know each other since quite some time. And we realized we had a discussion including members of Deutsche Bank and other robo-advisors, of which some are not in existence anymore, back in 2016. That is almost 4 years, and he kept going, and I appreciate that. Nonetheless, everybody who would like to see this, which was filmed in a little bit strange of an optic, can go down here in the show notes and join the 4,000 people who watched this video already. That said, welcome, and let's talk a little bit about what you did before Ginmon and what brought you to found a robo-advisor, because at the time this was a very novel idea, right?
Yes, that is correct. We actually started this company in end of 2014. So back in the early days when we talked last time, 2016, we were already 1.5 years old. So that is correct. I worked before at Deutsche Bank, so at a universal bank, mostly. I was a strategy consultant, a management consultant, so I was doing projects all across the company, but mostly related to the retail space of Deutsche Bank, so a traditional branch and online business of Deutsche Bank. And during this time, I had the feeling that the asset management and wealth management solutions that a bank like Deutsche Bank was providing were not sufficient to the needs of most people who have some capital market knowledge, but who are either not willing or maybe a little bit too lazy to organize all their finances themselves, or they are too busy with their main job and they want to spend the weekend rather with their family instead of crunching Excel sheets to optimize their own portfolio structure. And so a lot of people actually reached out to me while I was still working in a bank and asked me, hey, Lars, you know about finance. How do I invest, for example, 50,000 euros for the long term? And the reason why people asked me was not only because I was working at a bank, but also because I was also back in university doing the Goethe Investment Fund, which is the endowment, which was basically doing investment strategies for the endowment fund of the Goethe University in Frankfurt. So that's the biggest university we have here in Frankfurt. It's known for finance, it's known for asset management, and it also has its own endowment fund and investment strategies for this. So that's the basic concept that you know maybe from the US, where basically every big university has its own endowment fund and structures this itself. So the question was obvious to ask me, how do you do that personally? And I typically came up and recommended some sort of structure with ETF portfolios, something that you rebalance and do risk management regularly on. I had obviously all my Excel sheets and Excel models at that time to help with that work, but it was still a lot of work. And so people asked me, hey, I'm actually feeling a little bit insecure to do that myself. Maybe I'm doing something wrong. So could you not just do this for me? And yeah, as a friend, I obviously was helping people out. But once I was helping out more than 20 people structuring their personal finances, I thought, okay, there's actually a business model here. And I think a big bank like the one I was working for wasn't really eager at that time to address this market. And so we were building our own company. And to this date, I have not regretted this decision.
We may add, because you and I have a background in financial services, that ETF are exchange traded funds, basically like mutual funds, but they usually index trackers, meaning they replicate either by investing in shares in indices that are there. For example, they rebuild the DAX 30 in their portfolio, or they artificially replicate this. And you optimize the finances, I assume, with the modern portfolio theory, links to which you'll find down here in the show notes, of course. And if you did not need this explanation, stay tuned. There'll be more coming around. That said, you set up Ginmon. How did you at this time try to get new clients? Because robo-advisor was something new, something novel, something fancy at this time. And I'm not sure if people just jumped blindly on the next best offer for robo-advisor, didn't they?
Yeah, I think as most startups at the beginning, you are still figuring out what's your market, what's actually the proposition that is best addressing the target audience that you are aiming for. And the only thing I knew is that there is a market for this because, as I said, I was already approached by so many friends and family members who needed someone to manage their finances. So we knew kind of that this audience, which we call the mass affluence, so people who are actually above average income, above average wealth, but not wealthy enough to qualify for a traditional private bank or traditional wealth management services. In Germany, that is typically if you have 2 million euros and more, then you qualify for this service. So you can imagine that there's a vast majority of the population, also here in Germany and all across the world, that is below this threshold. But a lot of people who are actually wealthy enough or high income enough that they are actually thinking about investing. And so to address this audience, we started basically very simple by having basically something like an online financial advisor to provide automatically managed ETF portfolios. And that was basically the minimum viable product as a startup, which we used to figure out if people were willing to use our services to structure something like this and to let their money being managed by us. And once this proposition has been proven with the first couple of hundred customers on the platform, we basically had our first fundraising with the VC company from London called Passion Capital, also known, for example, for their investment in Monzo, a neobank from UK, and many others. And with this funding, we basically have grown not only the user base, but most importantly, we have decided to develop ourselves further in two areas. Area one was regulation. So we applied actually for a full financial services license at BaFin, which is a German financial regulatory authority. So since 2017, we've been fully licensed as a wealth management institution, as a financial institution in Germany. So fulfilling basically the same kind of regulation as any bank. We are not a bank, we're a wealth manager, so that's a different kind of types that you apply for, but the regulation is basically the same. So strict regulation, which is obviously on the one hand, as a startup, a lot of work to do, but on the other hand is very valuable because customers obviously trust you more when you are fully regulated. And the second area where we have developed a lot is in technology. So instead of just basically structuring online ETF portfolios, like we did in the first year and a half, we have basically built a platform that completely automates the whole wealth management process. So this platform is called Apeiron, and it is today, I think we can say in Germany, is a leading platform for automated wealth management. So what it does is it does automated risk management, risk profiling. It does things like tax optimizations. So very difficult optimizations that a typical financial advisor can hardly do for thousands of customers, our algorithms do completely automatic and on a constant basis. And those kind of things have obviously earned ourselves a trusted user base, people who see and notice that a service like this can best be done by a machine instead of a human. So instead of having humans who use Excel spreadsheets to optimize your finances, this is something that's completely done automatic. But not everything has always been done and is always done at Ginmon automatically. So, for example, we do value customer relationship. So we do have a customer-centric team, which basically does either calls with customers, or if customers have questions, they can reach out both on email, chat, phone. We also do like one-on-one sessions with customers. We do web. We do, for example.
We may add to, for the benefit of our audience, which is more than 80% based outside of Germany, that you fulfill a role like a digital IFA, and most people in the US would ask, huh? Well, I can go to my IFA, but we may add that the share of IFAs, of real investment advice in Germany, is very, very small. I would guess less than 5% of the total market, because that's usually something that the banks in Germany are providing, as well as the mutual fund companies. The big mutual fund companies, they're always owned by one of the big banks or the big banking groups. DWS is part of Deutsche Bank. Union Investment is part of the cooperative banks, and DECA is part of the thrift organizations. So you have very strictly separated market, as well as a very, very small share of actual IFAs, financial planners, and so on and so forth, which you would find in many other markets across the world. Is that what you see as well?
Yes, that's absolutely correct. So in Germany, we actually have still a lot of commission-based financial services. So a lot of mutual funds that are being, where the advisors are being paid for selling those products. So of course you have a conflict of interest, because the advisor has a high interest in selling you the product with the highest commissions. So this is something that has been supposed to be cut down on. But regulation is actually fairly slow, especially with regard to the smaller independent financial, or the smaller financial advisors. So at the bank level, basically the regulator starts at the bank level. So all the different branches and the advisors who work in a bank. So here they're relatively fast, because they are directly licensed by BaFin, by the Regulatory Financial Authority. But all these small financial advisors, there's a different regulation, a much easier regulation, so to say. And it takes years more, basically, until all the regulation trickles down to those financial advisors as well. So still today, even after MiFID II, the new financial regulation has been introduced, still years later, we see that those financial advisors, they are still not have to comply or do not comply to this new regulation. So as you say, still the vast majority of this business is working on commission basis, and it will probably still take a couple of years until this shifts to something that is more aligned with the customer interest, so that you really only earn based on what I think in the US you also call like the fiduciary service, where as we are only working in the best interest of our clients, so we are not getting any money from any product providers or ETF providers or any other financial services providers. We only get a service fee from the customer, and we are working in their best interest. And that is really the only model that works in the long term. And in most of Europe, this still takes a while until this really becomes mainstream. And I think providers like us, we're obviously working towards this. And I think more and more customers do this. And I think everyone who has ever experienced a service like this will never go back. So we only see one way this can go to, but we are not sure how many more years it will take until this really becomes the mass market mainstream.
Talking about you're not mass market yet, but from my understanding, I quickly went through your website and you have investment volume, let me quickly check, above 100 million with more than 5,000 clients, which would, making a very simple calculation, an average client will have a deposit of 20,000 euros with you guys, which means they're trusting you, right?
Yes, absolutely. So, of course, as I said, our average customer is a mass affluent. So let's assume on average we are talking about a lower 6-digit in euros and investable assets that they have. So investable assets means not their real estate. Of course, many people in Germany have some real estate, but it's not something they can invest. So we are probably at around 15% so-called share of wallet. So how much money are people trusting us to manage? So 15%, you could say, okay, that is not nothing, but it's also not a lot. It shows that people trust us and that they are probably not with 20 different providers, but with a couple. So they have some money on the bank. They have maybe some money still with some mutual fund. They maybe also have some insurance product in place. And actually in Germany, most of the money they usually have on a bank account with low interest rate, like just as deposits. But we are a significant provider to them. And our goal is basically to increase that share of wallet. So for the customers to trust us more and more money over time. And we see this. So kind of every year we see that people trust us around 20% more money. So we see that people who have stayed with us already longer, their share of wallet is significantly higher. And so this is kind of how this business works. So over time, they build trust, and with trust comes higher share of their wallet. With higher share of the wallet, obviously, we also earn more money. And that is kind of how this business works. So it's something where also we are interested in the long-term customer relationship.
Before we get into the other parts, can we talk a little bit briefly about how your average customer will look like?
Yes, sure. So are you interested in something specific, like the kind of demography or? Okay, so as I already mentioned, most of them have more than, if you would consider the German average income, average wealth, you would see that they're quite a bit above this. So they're not wealthy, but they're above average. So what we call the mass affluent. And this is obviously due to their educational background. So most of them have studied at university. So they are working either as engineers, lawyers, doctors, consultants, bankers in IT or any of those industries. They are quite a lot of them are basically in a leading role. So they are leading a team or even leading a company. We have quite some also who are entrepreneurs themselves, so who have founded their own company, or for example, when we talk about doctors, they have maybe their own practice. So those kind of typical customers. With regard to the age, we see two big target audiences. On the one side, we have the rather younger people, like in our age, around 30, which are basically have already earned quite some money, which they now want to invest, but are still young, maybe have not yet bought own real estate, so they still have quite some liquidity, so which they want to invest. And then we basically have the other big target group, which is people above 50, actually. So Most people did not expect this, that a digital provider would have also a rather older audience with above 50. But actually, that's our largest audience by far. These are the people who are already quite knowledgeable around capital markets, so who have already invested in stocks for a while, who have tried many different financial products like mutual funds. They have been advised by traditional financial advisors and so on. They've never really been happy with the services they have received. And once they've noticed the benefits of robo-advisory, they've basically stick to this. And the main reason why they invest is because they are saving for retirement. So in Germany, obviously, there's a government retirement pension scheme. The problem is that it's not enough. If you only have this, then you will have a really bad lifestyle in your retirement. So everyone knows they have to save, but still many people are lacking behind in their private retirement savings, either because they have started too late, or since they have started too late, they are not saving enough. So obviously, the later you start, the more you have to save every month. And then obviously sometimes people are, if they're already behind, so it's really hard to catch up again. And the only way to catch up is also investing profitably. So if you have a zero interest rate, then it's really hard to build up a private pension.
We may add that in Germany there is like a government-backed scheme which basically takes pay-ins you get automatically deducted from your salary into a public fund, and this again pays out to retirees, but there is like a certain limit above a certain threshold. I do believe somewhere between 60 and 65,000 euros. There's basically the end, and above, if you earn more, the government doesn't deduce any more money from you. So that means you get a very base retirement saving, and everything above that you have to fend for yourself. And that was the point where you were going with that, I assume. That said, people trusting you with retirement money is a pretty good thing. But also, as you publish today, people are also trusting you with investment money. You raised 6 million euros in Series A round. Congratulations to that as well. Can you tell us a little bit about it as well?
Yes, of course. So yes, we have raised. We've just announced today, actually, that so when we record this conversation, we have just announced that we have raised another round. So I already talked about the last round with Passion Capital. Of course, Passion Capital has participated in the round again, together with other previous investors. But most importantly, we have a new investor who joined the ranks of our investors, which is BCS. It's the leading digital broker and online and offline broker from Moscow. It is kind of a tech company as well, so also not very old company, very strong in tech and in the digital space, and they're already market leading in their market, and they're obviously looking also on how to diversify through investments. So they're more on a strategic angle rather than just on a financial investment angle. And of course, Europe is an interesting place to be because Europe is a very large market. It is a market that becomes more, in the past, it has been very difficult because obviously so many different countries, so many different languages, and also in the past, different regulation. But this is actually changing. So we see that the regulation in Europe becomes more unified. And this obviously enables that going forward, this will be a more unified market, and as such becoming very attractive as one of the big regions in the world. And of course, also a lot of interesting customers here and target audience. And of course, if you look at Europe, then you first look at the strongest economy in Europe, which is Germany. And as such, they have actually approached us. So whereas in the past, we have, like most startups, basically did financing by reaching out to many, many hundreds of potential investors and presented our company only in the end to basically figuring out one or two who are willing to invest. This time it was the other way around, actually. So last year we were approached by quite some different companies from all around the world, of course, mostly from Europe, but all around the world, who had different strategic angles or different reasons why they approached us. And this was, it was a welcome change actually for us to change this position from having to reach out and to hundreds of investors to actually being sought after, so that people noticed us, that they noticed the good work we are doing, and that they wanted to learn more, that they got to know more, to know about us, and that they appreciate the things that they have seen, the strong things that we have already built up in the past, and the momentums that we had. And so we looked at various different potential investors. And in the end, we decided for one of them as a lead for this round. And I couldn't be happier with the decisions that we have taken here and the steps that we have already done. And now, obviously, we're looking forward to use this money to grow our company. Of course, we want to grow the user base. We want to grow the assets that we manage, but also we are spending the money on new products and new services. We are developing more into the retirement. We are developing more into different services and products that are fitting exactly the needs that our customers have addressed to us. So I think for everyone, this is very good, especially for the customers that we already have and the ones who are joining in the future, because they will see many new features that will make Ginmon even better.
Bottom line is, what I actually heard from other startups in the past, that investors are starting to do their own scouting, their own research, and start digging for startups. Actually, that happens to a few startups that I've interviewed, that they got approached by investors. So congratulations for that. And I know just recently, as like last week, we've been in the top 200 tech podcasts in Russia. Can you tell, for any potential Russian or other investor who's out there, how did they approach you and what did they do right that they did not end up in your spam folder or didn't catch your interest?
Yes, that's a very good question, of course. Of course, when you're being first approached, it's all about the first email that you receive, right? And not always you are fully aware of what is the background of this. So I think what was done very well here, that the communication was from the very beginning was very open. So before I even scheduled the first call, I asked specifically what it's about and what is the ambition here, and why they are approaching us and how they got aware of us. And we got a very honest answer. We got we started right away with a very honest interaction and discussion. And I think that has always been, from the first moment, been the tone which we also appreciated. So often as a startup, you're wasting a lot of time with conversations with various people of various companies who are sometimes pretending something just to get some of the information that they're looking for, without really being honest about their ambitions. And I think that is what I have become very aware of, that I'm trying not to waste our time, because not just my own time, but also my team's time is valuable. We are not so many people. We're 25 people. So I can't waste anyone's time here. And I think that's what I appreciate when I'm being approached, like we were approached by BCS. It was very efficient from the day one. It was an honest discussion. And I think that's something that I would recommend everyone who's trying to approach interesting companies here, is to do the same. Be honest about your intentions. Be straight to the point. Don't waste anyone's time. And then I think everyone will appreciate that.
Sounds good to me, and everybody who'd like to reach out to you can do it through us. That said, there will be, of course, your LinkedIn profile as well as your company website down here in the show notes. And just between you and like 200,000 people who are listening to the audio recording of this interview, can you spill a secret? What was your first thought when you saw an email from Russia, we want to invest in you? What did you think?
Actually, we are very open-minded with this regard. So obviously we see a lot, like we also see the press relationship. Of course, it's no mystery that with regard to certain countries, but this is not just a topic about Russia. This is something the same. We have been very active in China in the past and other regions. You have to obviously have further checks and controls as for being a regulated financial institution. So this is obviously something we already knew, that once we get to the point, we will have to have some further checks and controls in place. But all those checks that we did, they checked out fine. And so for us, it was not so much about where the investor comes from. It was more about what they can bring to the table. So, and here what we have seen very early on in the process is that they are the market leader in their industry, not because they have some unfair advantage or something like this, but just because they are the best in what they do. They're the best in the digital marketing in their space. That's why they have the highest market share in their space. And they are really hardworking, and they are strong people. I mean, people we are interacting with, they are ex-consultants who are very analytic, very number-driven, very much about tracking numbers, improving numbers, the same kind of things that you would expect from any market leader in their space. And this is kind of also the things where we can still learn quite a lot. And this has been ultimately, I guess, the thing that we were looking for the most. We were always afraid of strategic investors when they are more about just a big company, but they're actually slowing down us as a startup. And this is something where I think we know that this is not going to happen, because they are as fast paced as we are as a startup. And so it's a cultural fit, I think, is very strong here.
I see. You said it doesn't matter where they are from. That's actually a very good approach. But talking about Frankfurt Forward, you are from Frankfurt. You're based here. Just to wrap it up, we know in a few minutes you have another call, but nonetheless, can you give us your thought what Frankfurt, especially as a business location, as your home, means for you? Why you're based here in Frankfurt? Why you set up the company here?
Yeah, I think you asked me the same question already in the past when we talked, why we founded Ginmon in Frankfurt. And I think it is still the same. It is still the same answer. So in 2014 and 2015, when we started the business, we were not deciding. Basically, I was working in Frankfurt, right? So you could say, were we just too lazy to move? No, we were not too lazy to move. We were actually actively deciding to stay in Frankfurt instead, for example, to move to Berlin. Like, I know friends of mine who have moved to Berlin. And the reason for this, I think, is threefold. The infrastructure here in Frankfurt is actually quite good for the things that we do. What we need talents, like young talents, which we have here. So we have good universities. We have Goethe University, Frankfurt School. We have TU Darmstadt, which is like for computer science, a very strong university. From all of those universities, we get regular talents, but also for talents from all other universities in Europe. Frankfurt is actually a place where many people easily also move to. So it's not hard to make people to move to Frankfurt. Especially international students who then basically become fixed or full-time members of the team. So that's the first topic, talents. The second one is the ecosystem and obviously logistics. I mean, now we are in the midst still of the COVID crisis. So It's not so much about traveling and so on, but in the times where traveling was important, Frankfurt was a very good gateway. So obviously we have the best and working airport here in Frankfurt. That's one topic, but also if you are traveling around in Germany, then you are kind of in the middle. So whenever you are using the train to get somewhere in Frankfurt, you are well positioned because you are kind of in the middle of Germany. And the third topic is basically that we have obviously a lot of banks here. It's not that banks are important for us as partners. I mean, obviously we are eager, some of the partners, like, or for example, also workplace investing, we are now working together with Mercer, which also has a big office here in Frankfurt. So many companies are sitting here, which is beneficial for, on the one hand, to have this exchange with other companies in the same city. But on the other hand, obviously also again for talent. So we have a lot of people who joined us from other companies. And for them, then it was easier because it's not a relocation. So it was much easier to, basically to join Ginmon. Yeah.
Just adding to that, personally, I found talking to entrepreneurs as well as companies who are relocating to Frankfurt and the surrounding Rhine-Main area, that they appreciate that you do get a lot of people with finance know-how, maybe in regulation, in coding, or in taxes. They find it very easy to get them here. And adding, since as you said, jump on a train, that means different things in different countries across the world. For the Americans, the trains leaving here from Frankfurt to, for example, Amsterdam, Paris, Vienna, and so on and so forth, they go approximately 140 miles per hour, which is 230 kilometers. So it's really high-speed trains. That said, high speed was not that interview. We're recording more than 35 minutes, but nonetheless, it was just a pleasure having you here. Congratulations to your Frankfurt Forward Startup of the Month, June 2020, again, as well as your funding round. Thank you very much. It was a pleasure having you.
Thanks. It was a pleasure to have you as well. Thanks. Bye.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.